This is Nightly Business Report with Bill Griffith and Sue Herrera.
Stocks drop as bond yields rise to their highest level in years. Is this just a test for the market and investors? Sluggish sales. Home Depot reports a rare sales miss, and the retailer blames unusual spring snow. Rolling the dice. Why Las Vegas is going to extremes to attract a younger crowd. Those stories and more tonight on Nightly Business Report, he said, for this Tuesday, May the 15th. Good evening, everybody. I'm Bill Griffith. Sue is off tonight. The Dow's win streak was snapped today after 8 consecutive up days. One factor may have been the 10-year Treasury yield hitting its highest level since 2011. Add to that new hints of inflation, a rise in oil prices, and fresh political geotensions. And you had declines across the board today. The Dow fell by 193 points to 24,706. The Nasdaq was off by 59. The S&P 500 was down 18. Bob Pisani takes a closer look now at the declines on Wall Street today.
Two key factors drove the market sell-off. First, after an 8-day win streak, the market is simply tired. More importantly, inflation concerns have come to the fore once again. Stocks sold off after the release of 2 economic reports this morning before the market opened: retail sales and the Empire State Manufacturing Survey. Now, retail sales overall rose just about as much as economists had expected in April, but gasoline prices spiked. Meantime, a gauge of manufacturing activity in New York State showed raw material prices rising to their highest levels in several years in April. You put the two together, and it rekindles the same kind of inflation fears the market addressed in February, when higher wage costs caused the Dow to drop 500 points on February 2nd during that jobs report. Now, the reaction today, though, was a lot more muted. The yield on the 10-year rose to its highest level in 7 years, but the price decline in stocks was much more modest than back in February, and volume was not particularly heavy down here, indicating investors were not rushing to sell. So here's the key question. Is the shock of higher prices starting to wear off? How comfortable are investors getting with higher rates? The economy looks strong in the second quarter. If rates are going up because the economy is good, that's not as bad as if rates are going up solely because inflation is going up. The action in the next couple of days will be a big test for the markets. Is this healthy profit taking, or are we just rolling over again? For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Investors were also caught off guard by North Korea today. There were reports that that country has indefinitely postponed high-level talks with South Korea, which were scheduled for tomorrow. The North Koreans were reportedly upset about a previously scheduled joint South Korean-U.S. military drill. It is unclear what impact this may have on President Trump's scheduled summit with Kim Jong-un on June 12th. So what does all of this mean for the markets? Joining us tonight, Ken Mahoney. He is here to talk about all this. He's CEO and president of Mahoney Asset Management. Ken, always good to see you. Thanks for joining us.
Good to see you too, Bill.
You're inclined to buy dips like today, right?
Absolutely.
Why?
I mean, the fundamentals haven't changed. The real story is about earnings. You know, real estate, location. For the markets, it has to be about earnings. And the earnings are very strong, and companies guided higher for the most part. And companies also have a lot of earnings because this tax windfall they have that they can buy back stock or pay more dividends. All pretty positive for the markets.
But the environment's changing. Rates are going up.
Yes.
I mentioned the 10-year now above 3.07%. Does that worry you at all?
A little bit, but like how we got there, it's not because of inflation, it's because of growth. It wasn't just 2 months ago people were saying, hey, we get a 3%, this market's going to roll over. You know, today 1% down is not really rolling over, so to speak. So, you know, again, if it stays up here and goes higher, we'll have to watch that because bonds are competition then to stocks. But the same token, if you think about it, just a couple months ago, we hit 3%. That was magic. The algorithms are going to start making the market cascade. That didn't happen.
Geopolitical concerns, the trade issues that we face right now. None of this we were talking about last year. It was all about earnings for the most part last year. Now we have all these different concerns for the market. What about those as well?
There's definitely a lot of headwinds. And you compare, you know, this year to last year. Last year was an anomaly. Most people saying, wow, this is crazy this year. All this volatility. We've had 2 10% corrections in 2018. Guess what? 2018 is more normal of a market than what happened in 2017.
Right.
The biggest drawdown we had in 2017 was only 3%. So, you do expect these headwinds, and we have this kind of push and pull going on.
So when you get this kind of a dip, what do you buy? What do you like right now?
I like technology. I like large cap. Technology, because we're getting top line growth. Companies are still growing their sales numbers. Most of the other industries are making their numbers because of EPS, meaning they're buying back stock, they're hitting their numbers. But really, if you look at technology, they're still growing in sales, and that's where the action is.
But you're not betting on the consumer right now.
No, not at this point. I mean, the consumer staples has been a laggard. I think there's some branding things that's going on. There's some undercurrents. I like to go where the leaders are. That's where the pin action is right now. It's technology. Yes, they're more volatile than most of the other sectors, but that's where the growth is, and that's where investors can be attracted to, is where there's going to be some growth.
I know you're investing for growth. A lot of our viewers invest for income, but with rates rising, it's tough to find a safe investment there, or relatively safe. Where do you go?
Well, again, there are those tips, that trade along with that. There are those different type of investments, ETFs, rising rates, floating rates type of thing. Those type of ETFs do give, some type of immune off those higher rates and lower bond prices.
All right. Ken, always good to see you. Thanks for your thoughts tonight. Ken Mahoney with Mahoney Asset Management joining us this evening. Elsewhere, the Treasury Department said today it is ratcheting up sanctions against Iran by targeting the governor of Iran's central bank. The U.S. has designated him a terrorist for allegedly helping move millions of dollars to Lebanon's Hezbollah. Sanctions like this are intended, of course, to further isolate Iran from the global financial system. High-level trade talks between the Americans and Chinese officials get underway this week, and many expect those discussions to be tough and difficult. Eunice Yoon reports tonight for us from Beijing.
U.S. Ambassador to China Terry Branstad says that Beijing and Washington are still very far apart when it comes to resolving trade tensions. Speaking at a conference in Tokyo, the ambassador said the Trump administration wants the Chinese to give them a timetable on how China will open up its markets to U.S. products. Ambassador Branstad said boosting the sale of natural gas would be on the table, and he also said the U.S. would consider easing tariffs if China opened up its markets for cars and especially food. Expectations are high that negotiators in Washington this week will work out a preliminary deal that would include greater imports to China of American agricultural products. China would ditch tariffs on some U.S. farm goods like soybeans and scale back some of its non-tariff barriers like quality control inspections. In exchange, the U.S. would ease restrictions on Chinese telecoms company ZTE, which has effectively stopped operations because of a U.S. sales ban. The deal could also encourage the Commerce Ministry here to restart its review of Qualcomm's acquisition of NXP of the Netherlands. That review had been stalled because of the Chinese. I spoke to the chair of the American Chamber of Commerce here, and he said that the U.S. business community is concerned about a potential missed opportunity. He said there's a fear that the focus on cutting the trade deficit and the reprieve for ZTE could become a distraction from the larger structural issues like market access and fair and reciprocal treatment. And with President Trump wanting China on his side for his upcoming summit with North Korea's Kim Jong-un, there's a worry here that the Trump administration could rush a deal without addressing those concerns. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Home Depot was one of the worst performing stocks in the Dow today. Shares fell more than 1% after the home improvement retailer reported a rare quarterly sales miss. Courtney Reagan has more on Home Depot's results.
Unseasonable weather kept consumers from spending on garden supplies and outdoor merchandise during a time when spending on those items is typically high. Gardening supplies and outdoor make up about 20% of Home Depot's first quarter sales. The weather hit hardest in April, which the company said was one of the coldest and snowiest Aprils in 20 years.
I don't think it's as nearly as bad as this looks because we had a slow start to spring. And this is coming off of 2 years where there really wasn't much in the way of a winter. Once the weather turned, sales picked up.
In fact, Home Depot said May comparable sales are up double digits compared to just a little more than 2% in April. Good news, as the company says May is the most important month for gardening. Home Depot executives expressed confidence that sales lost in the first quarter will get picked up in May, June, and July, and as a result, reiterated its full-year forecast. While outdoor categories missed the mark, the rest of the store did well. Sales of items $900 and above grew 10%. Sales of appliances increased double digits, including now higher-priced washing machines because of tariffs. And the company tells me consumers aren't changing their buying behavior as a result of those higher prices. Lumber is still selling, even with prices at historic highs. But perhaps most important to Home Depot's continued outlook is the continued strength of the U.S. housing market. Even as mortgage rates move higher, the national average is still below the historic average, and the affordability index, accounting for local housing market differences, remains well above the level Home Depot considers a red flag.
Home Depot's been, I think it's one of the best run companies out there. I think it's very well positioned in a growing sector.
While investors may have been disappointed with today's results, many analysts are already looking past it and see longer-term growth. For Nightly Business Report, I'm Courtney Reagan.
Time to take a look now at some of today's upgrades and downgrades. Ford's rating was cut to neutral from overweight at Piper Jaffray. The analyst there says the automaker is not doing enough to become a leader in the autonomous driving industry. Price target $12. Shares rose fractionally today to $11.22. Shares of CBS were upgraded to outperform from market perform at Bernstein. The analyst there cites the low probability of a merger with Viacom. Price target $65. Shares rose more than 1% today to $54.42. And the Gap was upgraded to outperform from market perform by the Telsey Advisory Group. The analyst cites recent traffic gains in the retailer's stores and the stock's valuation. Price target there is now $39. Shares finished up 2.5% to $31.16. And Tesla's price target was cut today by an analyst at Morgan Stanley who had been a longtime Tesla bull. The firm cited the continued trouble in the electric car maker's production process for its Model 3 sedan. Price target now $291. And by the way, there are reports tonight that Tesla will be temporarily shutting down its Model 3 production line to make some fixes. The stock today off more than 2% to $284.18. Still ahead, the land of the driverless cars.
I'm Phil LeBeau in Chandler, Arizona. This is Ollie, autonomous electric shuttles, one example of self-driving vehicles being developed in the Phoenix area. Why is this a hotbed for those types of vehicles? That story when Nightly Business Report returns.
Seattle's City Council has passed a new tax that will be levied on big companies located there. The tax is estimated to raise about $48 million annually. The revenue will help fund homeless services and affordable housing. Seattle-based Starbucks was critical of that law. Amazon said it was disappointed, adding that the city doesn't have a revenue problem. It simply has a spending efficiency problem. Well, as auto and tech industries race to develop self-driving cars, testing the technology is no longer happening solely in Silicon Valley. In fact, an emerging hotspot is in Chandler, Arizona, just outside Phoenix. Phil LeBeau takes a look now at why the Valley of the Sun is heating up for self-driving cars.
Drive around Chandler, Arizona, and you'll see them with regularity. Self-driving Chrysler minivans being tested by Waymo, formerly known as the Google Self-Driving Car Project. These Waymo vans, along with self-driving cars being built at Intel, chips and processors from NXP for the brains behind the wheel, and Ollie autonomous electric shuttles have all made suburban Phoenix their home. Ollie's manufacturing plant here in Arizona is part of a larger push by state and local leaders to make the Valley of the Sun a center for developing autonomous drive vehicles.
The reaction of my community has been really, really good. They like that we're involved with this, the autonomous vehicle companies.
While Arizona has embraced driverless cars by adopting less stringent rules and actively recruiting the development of these cars, a fatal accident involving an Uber test car driving in autonomous mode raises the question, Is the Valley of the Sun too exposed to this future technology? For now, residents in Chandler are not overly concerned with the surge of driverless cars on their streets.
You know, I'm intrigued by it. I won't say I'm freaked out by it. I don't trust them entirely.
Doesn't scare you at all?
Not at all, not one bit. I'm actually up for it. If I could, I'd say push harder, you know, let's bring out a little more, you know.
Because they seem to go with the flow, and I'm comfortable with that. I figure they're probably the safer car of all the ones out there.
A future without drivers, now driving the future of the Phoenix area. Phil LeBeau, Nightly Business Report, Chandler, Arizona.
Pfizer's anemia treatment gets the green light, and that's where we begin tonight's Market Focus. The FDA approved that drug, which is almost identical, by the way, to treatments made by Amgen and Johnson & Johnson. The drug is intended to treat anemia caused by chronic kidney disease or chemotherapy. Pfizer hopes to make the medication available this year sometime. Shares of Pfizer were off a fraction today to $35.69. Meanwhile, shares of J&J and Amgen also fell on that news. Tyson Foods is buying assets from the company American Proteins that will help it recycle more animal products to use in feed and pet food. The meat producer said that the $850 million deal will increase its presence in the animal feed business and also help reduce greenhouse gas emissions. Shares were off a fraction today to $67.28. Vodafone says its chief executive is going to step down after 10 years at the telecom company. He will be replaced by the current CFO. Vodafone shares fell more than 4% on that news to $27.04. And Chinese regulators have okayed the $8 billion merger now of semiconductor makers Microchip and Microsemi. That clears an antitrust hurdle for those two companies. The approval means it is more likely now that the deal will in fact close. Microchip shares were off a fraction to $93.36. Shares of Microsemi rose a percent to $68.55. You know, recycling your used paper and plastic could end up costing you more money. According to the Wall Street Journal, U.S.-based recycling companies made money for years by shipping goods to China. But Chinese officials recently halted those shipments because of contamination concerns. And that, in turn, has forced some cities in the U.S. to charge residents more to recycle goods that may now just end up in a landfill somewhere. Bob Tita did the reporting for the Journal, and he joins us tonight to talk about this. A fascinating story, Bob. I had no idea that the Chinese soaked up that much of our recycles over the last 20 or 25 years, right?
Yes, that's right. This has been going on for a number of years, since the 90s. China has taken enormous amounts of scrap paper, cardboard, old plastic containers, and turned them into new materials that have sort of fueled their economic boom in the last 20 years.
But what we sent them wasn't always perfectly recyclable. I mean, for example, there were still pizza slices in pizza boxes and food and other things in here. So they are calling foul and saying they want a pure recyclable shipment. Is that the idea?
That's correct. For years, the sort of goal was to push as much through the system as possible, and the more we push through, the lower the quality got, and waste materials, household garbage, food items got mixed in, and that all got sent overseas and was discovered when the Chinese started to take it apart over there, and as the years went by, they just got tired of it and said, enough, we're not going to take all this trash because then we have a disposal problem over here.
So, okay, as I mentioned, cities are now starting to charge more to recycle. Sometimes it goes to a landfill now. Does it make sense economically now to recycle? What's going to happen here, do you think?
Well, I think what's really happened is you're still going to see recycling. Recycling is here. It's been around for over 20 years. These curbside programs, that's going to continue. The real challenge is to sort of find new markets and to clean up the material that we're collecting right now.
And it occurred to me, and probably occurred to you as well, is this only a negotiating tactic for the Chinese as part of our trade disputes going on right now?
Well, I don't think it's completely trade related. Perhaps some of it is. I think even people in the recycling industry and the waste hauling industry will concede that this trash in the recyclables is a problem. It's a problem that has been getting worse. And the industry has kind of known about this for years. But as long as the Chinese kept buying it and taking it, there wasn't really a whole lot of concern or immediacy to deal with it.
So the lesson is leave the pizza out of the pizza box. Bob?
That's correct.
Thanks for joining us tonight. Appreciate it very much.
Thank you.
Bob Tito with the Wall Street Journal tonight. Coming up, the big bet Las Vegas is making on millennials. Officials in Nevada say they are not worried about yesterday's Supreme Court ruling that overturned that ban on sports betting in most states. In fact, they say Las Vegas, where sports betting is already legal, could benefit. That's because Sin City is going all out to attract a younger crowd. Contessa Brewer reports for us tonight.
Las Vegas is seeing a record number of visitors, and they're getting younger and younger, but they're not necessarily coming to gamble.
I can smoke inside because I can't do that at home.
EDC. What is that? The Electronic
Daisy Carnival.
The concerts and the clubs, the restaurants and the pool parties are a big draw. Wynn Resorts hosts celebrity DJs in residence. Marshmallow really draws the 20-somethings in. Chain smokers draws in the older millennial crowd, those who are hitting their career stride and may have more money to spend. The MGM Grand caters to a crowd craving a cool social experience. Part arcade, part sports bar, part casino. Would you ever play the slots?
No, I like card games.
I don't like chance. That presents a challenge, but casinos are betting technology can change that.
In our new Casino of the Future that we're rolling out, it's called CX3, we actually have worked with a lot of the game manufacturers, and we're introducing slot product that allows you to plug your phone in, automatically it recalibrates to the game you were last at, and then shows you a leaderboard and where you rank on that leaderboard. So much more interaction.
Just this month, Nevada approved Gamblit Gaming's Tri-Station game machine. It offers different game choices. I tried out Into the Dead, a zombie game that has more than 40 million mobile downloads.
In our case, a lot of the players that played the game weren't even expecting to play. They were walking by and they saw something that was interesting to them that they thought they would try playing, and that's new revenue for the casino floor itself.
Gamblit's multiplayer machines will soon offer games a lot of people will recognize. Pac-Man, Deal or No Deal. You know this game, Cut the Rope? It's been downloaded more than 1 billion times. So imagine you're walking through the casino and you see a game you've spent way too much time playing on your phone, and you think, yeah, I can master this. Voila, you've turned someone with no interest in the slots into a gambler.
We're super pleased to report the average age of our players, 35, 36. Which is a 20-year shift from what you see for average electronic game players.
And don't forget sports. Vegas is rapidly becoming a sports town. Visitors of all ages stream in to see the Golden Knights. And esports, that's competition in video gaming, draws massive young crowds to a first-of-its-kind dedicated arena at the Luxor. And with the way clear now for legal sports gambling, what happens in Vegas won't stay here. In Las Vegas, Contessa Brewer, Nightly Business Report.
Now, additionally, some have said that this Supreme Court ruling on sports betting could increase the value of some sports teams. In fact, today there were reports that a hedge fund manager is close to paying a record amount for an NFL franchise. Robert Frank has that story.
Hedge fund billionaire David Tepper's purchase of the Carolina Panthers for $2.2 billion sets a new record for the NFL and ties him for the highest price ever paid for a sports team. And based on the economics of sports, team values showed no signs of slowing. Tepper paid the same price for the Panthers that Tillman Fertitta paid for the Houston Rockets last year, which is more than 25 times its purchase price in 1993. And it blows away the previous record price for an NFL team, easily passing the $1.4 billion paid for the Buffalo Bills in 2014. There are now 87 sports teams in America worth at least $1 billion, and the list is growing. The premium for live sports in an increasingly fragmented media world is part of the reason, but the growing number of billionaires who want trophy assets that generate cash, status, and membership in an exclusive club is the main driver of prices. Now, when Steve Ballmer paid $2 billion for the LA Clippers in 2014, it was nearly 4 times the previous record for an NBA team, and many say he overpaid. Forbes now puts the team's value at $2.2 billion. Now, the Dallas Cowboys are still the most valuable team in sports, worth an estimated $4.2 billion according to Forbes, followed by baseball's Yankees and soccer's Manchester United, both at $3.7 billion. Now, Tepper owns 5% of the NFL's Pittsburgh Steelers, worth an estimated $2.25 billion, and he needs to put up 30% of his own cash to buy the Panthers. He'll be selling his stake in the Steelers for about $120 million, so he needs only around $540 million more to buy the Panthers. And Tepper is worth $11 billion, so the deal will still give him plenty of cash to change all his Steelers jerseys to blue. Robert Frank, Nightly Business Report.
Finally tonight, the man who first called Wall Street bond traders masters of the universe has died. Author Tom Wolfe famously chronicled American power and greed in his classic novel, The Bonfires of the Vanities. He also immortalized the original Mercury astronauts in The Right Stuff. Wolfe also pioneered new styles of writing, and his way with words helped popularize catchphrases like radical chic and the me generation. Tom Wolfe was 88 years old. One more look at Wall Street. Minus signs today. The Dow was down 193 points. NASDAQ down 59. The S&P lost 18. That is Nightly Business Report for tonight. I'm Bill Griffith. Thanks for joining us. See you tomorrow.